After selling off for several months, Bitcoin recently formed a low just below the 33,000 level on January 24th. 2 days later, the chart looked like this, and we published a video talking about the big picture of Bitcoin. And we suggested in the video that Bitcoin may not be entering into a bear market and instead may be actually finding support and setting up for a short-term rally. One of the reasons we suggested that was because of the prior institutional support that was found during the previous sell-off from the summer of 2021. Between May and July, when Bitcoin came down to a low of 29,000 and ranged between 29,000 and 34,000, we suggested that many institutions had stepped in, which is what caused the market to rally all the way back to its highs a few months later after a more than 50% correction. We suggested that institutions would be looking to protect their investment if the price came back down into this range again, and we suggested that it was not likely that Bitcoin would go below the $29,000 level very easily. Another reason that we said we may soon see a bounce was because of the parallel channel that had formed, which was giving trendline support, connecting the prior highs from April of 2021 with the highs that were formed, higher highs in November of 2021. We saw this channel. And at the time, if we extend the channel out, we notice that the channel was coming right into support of where the current price was at that time. Notice how on the January 24th lows, just below 33,000, came into support of this channel connecting the highs from 2021. Because of the combination of this institutional band of support from the prior sell-off, combined with the ascending channel that you see here, we suggested that Bitcoin may soon give us a tradable rally from the 39,500 level all the way up to the 44,000 level. Well, actually, Bitcoin has done that, and it's actually exceeded our target of the 44,000 resistance level. If we remove this channel and we now move the chart to the right to see the current price, we now see that we've got a rally all the way up to nearly the 45,000 level before pulling back, currently trading just above the 44,000 level. Now, if you feel like you missed the Bitcoin rally off the lows, don't fret. There's going to be plenty of opportunity to profit if this trend reversal holds up, which so far it looks like it's going to. So in today's video, we're going to show you where you may consider buying Bitcoin on a pullback that will provide you with a lower risk entry point and a positive risk reward ratio versus chasing the price higher. Now, in our January 26th video, we said that resistance would be found at the 39,500 level up to about the 44,000 level. And here's why we said that. If you see these two horizontal yellow lines, this marks where the resistance was prior to the rally that we see right now. At the time, we had resistance of the prior lows from back in September, and we also had prior lows from earlier in January. And those prior lows would act as resistance because the most important tenet of technical analysis says that a prior level of support becomes the new resistance level after the support is broken. So we expected to find some resistance at the 39,500 level all the way up to the 44,000 level. You can see the purple box here kind of highlights that band of resistance we had for several weeks where the price kind of hung out between 39,500 and 44,000 kind of hung out before breaking down. So we expected that to be resistance, as well as going all the way back to September, the same thing kind of happened. Now, our video we put out on the 26th of January, which was back here. So after that happened, Bitcoin just kind of grinded higher for about a week and a half, had a little bit of a pullback. But then on February 4th, we had a big up day on big volume, confirmed by the volume. And that was, on a technical level, a very important day because what that did was it put Bitcoin's price back above both its 20 and 10-day moving averages. The green line is the 10-day moving average. The blue line is the 20-day. So that rally day put the price back above both the 10 and 20-day moving average. Now that's an important indicator of short-term trend, indicating that the trend may be shifting in the short term to the bullish side. After that, we went sideways for a day or two, and then the momentum continued and we rallied again. And as of today, we see that we actually popped just above that 44,000 resistance level, but was unable to hold. We were unable to hold above that and drifted back down into that range. So far, Bitcoin's been playing out exactly as we anticipated it would. We initially ran into some resistance that caused the pullback here at 39.5, but then we pushed through that and we got the tradable rally that we said in the last video we anticipated, a tradable rally between 39.5 to 44,000. And we actually had several positions in the Morpheus crypto service where we made a nice gain during this period. But if you're looking to buy Bitcoin now, you may be wondering, okay, so where do I buy? If we're stuck in this resistance band, what am I looking for a low risk entry point? Well, again, we mentioned that a prior level of resistance becomes the new level of support after the resistance is broken. Now, this 50-day moving average here is very key because as of 2 days ago, we popped back above this 50-day moving average, the red line, and it was the first time we were above the 50-day moving average since the sell-off began way back in November. So since we've been in this downtrend, we had been below this 50-day moving average. And the 50-day moving average is a very important indicator of intermediate term trend. So while we've already popped above the short-term resistance level and reversed the short-term trend to bullish, we now see actually the intermediate term trend improving as well with a move back above the 50-day moving average. But currently, we've been unable to confirm a higher high because of resistance at the 44,000 level. So one scenario that might happen now is you might get a bit of a pullback. And where should you consider buying Bitcoin? Well, the first level you may find some support is a pullback to this 50-day moving average that we formerly broke out above. Currently, that's at 42,700, this 50-day moving average. So you can actually look to take a small position on a pullback to about the 42,700 area, but be prepared for a further pullback that might shake some people out. But we may find support right around the 39,500 to 40,000 level. The 39,500 level is now a very important support level because that was a key level of resistance we broke above. So we're going to be most likely seeing buying pressure if we get any type of a pullback to near the 40,000 level. Not only is that the new support from the prior lows, but also we've got the 10-day moving average there now is going to act as support. Notice how the 10-day moving average has crossed above the 20-day moving average, which is also a bullish signal. And the 20-day moving average, the blue line, is starting to trend higher. So if this price action continues, even if Bitcoin just goes sideways for the next couple of days, that's going to enable the 10 and 20-day moving averages to continue rising up, and we'll soon cross above the 50-day moving average. Now, when that happens, when we get the 10-day moving average and the 20-day moving average crossing above the 50-day moving average, and the price is above all three of those levels, that would be a confirmed reversal of intermediate term trend. But we're not there yet. It's too early for that. So right now what's happening is we've got a short-term bullish trend. We don't want to be fighting the short-term bullish trend, but intermediate is kind of neutral because we've popped above the 50-day moving average, but we've not confirmed the intermediate term reversal by forming a higher high and higher low yet. So this is actually a nice time to look for a relatively low risk entry point in Bitcoin, because if you buy the pullback to the 50-day moving average, you can take a partial position, look to scale in, and with the intention that if it comes down to the 40,000 area, 39.5 to 40,000 level, you've got these prior lows and a 10-day moving average, you can have the original plan to add to your position. If we don't pull back that far, at least you can get a small position on the pullback to the 50-day MA, but don't take the full position on the 50-day moving average because you want to save some bullets in case we do pull back further, which would give a very positive risk-reward ratio. Now, if you're looking to buy Bitcoin for a swing trade on this pullback, you can actually set a stop very neatly below this prior swing low, right around the 36,300 level. So if you set a stop around 36,000, we shouldn't go back below that level, especially with 39.5 now acting as support. So that would give you a positive risk-reward ratio. So again, look for a pullback to around the 42,700 level would be the first potential buy point, followed by the 39,500 to 40,000 area, which is the prior lows and also the 10-day moving average. And we've got the 20-day moving average rising up to provide support as well. Now, how high will this rally take us? Well, of course, we try not to predict what the market's going to do. We actually see what the market's doing and we react. So we trade what we see, not what we think. Nevertheless, though, we can look at the weekly chart and we can actually find where we might see some resistance here on the weekly chart. If we delete these horizontal lines, it's a little bit easier to see. And you notice this red line here on the weekly chart? This red line is actually the 50-week moving average. And the 50-week moving average has become a very important level on the long-term charts because notice last summer, right, in May through July, we bounced off that 50-week moving average, and that actually sparked the rally that led us to new highs a few months later. Then back in November and December, we came down to support of that 50-week moving average. Notice how it tried to hold up for 4 weeks in a row before we finally broke down below it. So this 50-week moving average has been a very important indicator of support, and now it will act as resistance because a prior level of support, once broken, now becomes new resistance. So any resistance up to this 50-week moving average, we do expect to see definitely a pullback and some selling pressure because that's now the new resistance level. So that's currently right around the 48,000 level, just below 48,000. So if we get a pullback here, you may want to consider looking to sell into strength in Bitcoin around 48,000 if you're swing trading it. Of course, if you're looking to buy and hold long term, that doesn't apply, but we are swing traders, so that's an indication there. So I hope this video has been very helpful to help you determine a lower risk entry point of where to buy Bitcoin. Overall, the short-term trend is bullish, and we're looking to buy pullbacks for short-term swing trade entries. In fact, we're going to be putting out another video here soon with our top altcoin swing trade setups that we're looking at. So be sure to keep an eye out for that. And if you want to be able to participate in those trades, you can go over to our website, morpheustrading.com, and I'll put a link here in the description too. You can click on the link and get signed up for our crypto service to receive the best swing trading picks, exactly where we're going to buy and sell them. Of course, there's plenty of information on our blog as well. And we've got a crypto trading chat room, which is great, where we talk about all these trade setups every day and provide lots of education. So we'd love to see you in the chat room. Thanks for watching this video. If you liked it, please hit the like button and subscribe. And we'll be back again soon with another video.